Retirement plan advice. My employer, oh, these are not rants, these are good ones.
This is Katherine and Christopher Tipper of Hunter Benefits Consulting Group. And what day is it, Christopher?
Today is the best day of the week. It's Friday. We're sitting on the couch.
With our bourbon.
So this is our On the Couch, the Friday afternoon bourbon edition. How y'all doing? So what we like to do is what we call our rant on Reddit. And Zach has found 5 or 6 different
legitimate questions.
Real questions. These things are out there, all right?
Okay.
And this is from the personal finance subreddit. I have both a 401k and a Roth from my previous employer managed by Schwab. My new employer doesn't offer either option. Do I need to roll this into a new plan, or can I leave the accounts with Schwab? I definitely don't want to be hit with the penalty as well as tax on the money. If I were to do so, I was thinking Chase. I bank with them and have credit cards. If anyone has experience with either, that would be appreciated. Also, I know I can still contribute to a Roth on my own. But is it possible to do pre-tax contributions toward a 401k? Thanks so much for any advice. This is only my second full-time job, so I'm still very new to this. Expected retirement is 2050, by the way. Oh, it's so about 35 years old. Catherine, this is actually, I'm going to have a hard time ranting on this one. This is almost a good question.
Okay.
Yeah.
So I would say the first thing, if you are really looking for the best solution, you go and talk to your employer and say, why don't you offer a 401k plan, which has both Roth and regular pre-tax in it, right? That's the best thing.
Right.
The next thing is Schwab. That's where the money is. You're with your old employer. It depends a lot on whether you're being hit with fees or not. So look at it from a fee perspective. But you can keep it in place. They won't auto roll you out if you're above $5,000.
Right. Okay, so my helpful advice first to everybody is stop conflating products with plans, okay? Chase is not an IRA, Schwab is not a 401k. Those are different products, okay? So the bit of friendly advice is if you have more than $5,000 in your account at your prior employer's 401k plan, they can't roll you out. The fees and investment options there might be better than what you can find out on your own, so you need to double check that. All right?
And the other thing that this person asked is they don't want to pay taxes. So if they roll it into either an employer-sponsored plan or into IRA, they won't have a taxable event if they roll the same money taxable type over.
If it's direct, yes.
Right,
if it's a direct rollover.
So it's how you do it, not necessarily which financial company you go to, but how you do it.
Exactly.
Okay, so
number 2. Maybe I get the good rant here. We're gonna.
Okay, so this is from our personal finance. Posted by Naturally Artful One.
Okay,
I like that. Okay, just started a new career with the state government and benefits are good but complex. I am currently mid-30s and looking to choose one or two supplemental retirement plans. The options are 457B, Roth 457B, 401k, Roth 401k, and 403B. I've done a good bit of research, but I am still undecided. Any advice is appreciated. Hey, call me. I'm HR, and I'd love to hire somebody who actually knows all those numbers. That's my advice.
That's an interesting rant. Okay, so this was supposed to be my question. All right, so this is a very. Where do you find these? These are good questions. These aren't like last time, Zach.
Please call me.
Okay, so this is a very, very unusual situation. This is more of a. I'm going to have a hard time finding a rant.
Make a choice of a banquet of options.
Yes, they have a lot of different choices here. Most governmental entities aren't allowed to have 401k plans. These are very old grandfathered ones, but they've also got, I have never seen a governmental entity where you can have both a 401k, a 457, and a 403b pre-tax and Roth option with the same employer. That's a very, very small Venn diagram crossover there, all right? Figure out the differences are going to be which one gives you the right limits, all right? You're going to have to double check to see if the investment options are different, okay? But great job, great employer. You're really lucky.
Yeah.
We're presuming they get reasonable funds.
Yeah.
All right.
Okay. Yeah. Okay.
Very interesting,
Next
Zach.
one,
Very
Christopher.
interesting.
Okay.
Oh, I'm reading to you.
You're reading. Yep.
All right. This is from
My listening glasses.
Yes, you've got your listening glasses on. This is from the financial planning subreddit. My employer has notified us that they will be changing out plans from a simple IRA to a 401k. Yay! My
Gold
words.
star. Gold
What
star.
are the advantages of this? Oh,
lot.
wow. We're going to be gone for a while. All right,
lot.
Catherine, have at it.
Well, higher limits,
Higher limits?
usually more choices,
Yes.
both in terms of funds and could have Roth in it,
Yes.
could take loans.
Legally possible.
Legally
Doesn't have
possible.
to offer it.
You can't take a hardship from a simple.
No,
Is
you
that
can
it?
just take a taxable distribution.
Okay. So, I mean, there's just lots more options in terms of investing and also
Limits.
withdrawals and limits. And yeah, good.
Wow, another fantastic employer. All right.
So what else? What else? Anything I missed in all of that?
So obviously for us, the right answer is always 401k. We weren't able to say that with the prior employer because it was a governmental entity, but 401k always wins over simple for the employee because they've got more choice, higher limits. The investment options may or may not be more, but you have the choice between a pre-tax or a Roth, which you do not get in a simple. There is the possibility of a participant loan, which you don't have in a simple, and also there is the possibility of higher discretionary employer contribution limits than you can get in a simple. So all the way around, fantastic employer. You've got a lot more options. This is going, I didn't look at, based on when this was posted, this might have been for January of this year or it might be for January next year, but you always transition from a simple to a 401k plan on the following January. So that's, wow, great employer. All right,
Yep, okay.
You got your reading glasses?
Put my reading glasses on.
All right, we got two more here.
Okay. Once again, our personal finance pointed by whatever. Woohoo! Looking for financial/retirement planning advice. Moving U.S. to Belgium. Send chocolate.
Moving you.
That's the answer. Okay. Chocolate's always a good gift. Okay. Trying to figure out options here. A 34-year-old U.S. citizen moving to Brussels for work. Do not intend to retire in the EU, though I might be there for 5 to 10 years. Have been contributing to my 401k over the last decade. Good job. New job offers an employee-sponsored retirement account, which sounds good, except I can't seem to figure out how portable it is when I return stateside. Love the word portable. You're paying attention. Would I be better off to forego that altogether and simply invest funds in the U.S. IRA? Hope that's clear. The goal / my worry is to be able to access the funds in the future. Good job.
All right, so this is a very interesting situation. The United States is and if somebody else can prove me wrong and find out there's a different country doing it exactly like us, please let us know. But as far as I know, the United States is the only country that has a retirement plan system like ours. So what this person's going to have in Belgium is going to be a very, very different retirement plan situation. They may not have an option, all right?
I have a question at the end.
Okay, don't not participate in it. You are going to have to find out from somebody who's not named Hunter Benefits as to exactly what to do with those funds, all right? But because the Belgian rules and the US rules are going to be very different, depending on what your US income is, because your contributions to a US IRA are going to be based on US sourced income, all right? So you're going to have to look to see what US income you're going to have and what limits you're going to be able to have for the IRA. But if you have the cash flow, take advantage of both. However, a little footnote here, don't know if you've looked at this or not, but even when you're living outside the country and only being paid, is Belgium's on the euro, right? I think Belgium's on the euro. All right, so you're going to be getting paid in euros in all likelihood, all right? You probably still, or you depend on it, have to file a U.S. tax return. All right, you got your reading glasses on,
Yes,
love?
I
Okay.
do. Let's see if you like this question, can answer it,
Okay.
or you're just going to drink.
Well, I glanced and I probably won't. But keep
Okay,
going.
our personal finance, looking for retirement planning advice. And it was
that better read it.
100% upvoted. My husband and I are looking for a financial planner / advisor to help us plan for retirement. We really want someone who is able to map out a plan for us and give us target numbers to save annually in total. We feel a bit lost right now. We both have our own 401ks, but we're really looking for someone to help us maximize our savings in addition to our personal 401ks. Do we do a backdoor IRA? You've been doing some reading. Would anyone recommend speaking to someone at a place like Charles Schwab?
Never.
Only if you can film it and post it on Reddit.
Yeah.
If so, what's the cost associated with having a financial planner there?
Okay. All right. So
are you going to talk about when free is not free?
When free is not, when free is expensive. Okay.
Yeah.
So don't talk to product people about specific retirement plan advice. Maximize your own deferrals first. That's what each of you get to do in a 401k plan. The phrase is usually backdoor Roth. That will work if your employer allows it to. Vast majority of retirement plans do not allow it for testing purposes. Number two, you can really only benefit from that if you're making under $135,000 last year, because you need to be considered a non-highly compensated employee. All right. So basically, if you're contributing to a 401k plan, that is an employer-sponsored retirement plan, and that does limit the amount of money that you can contribute to on a pre-tax basis to an IRA. All right. So you've got to maximize the 401k plan first. If you're not highly compensated employees, look to see if your plan allows for backdoor Roth, and if you can afford the extra money on an after-tax basis, you may want to put it in there. But you're going to pay with the financial professional the amount you negotiate with them. The vast majority of them that we come across are a flat dollar amount, all right? And a certified financial professional is not looking for somebody putting $1,000 or $2,000 away. They're looking for more zeros than that.
And the one thing I actually want to say for that is the one client situation that I knew of where somebody was doing a lot with backdoor Roth. It was a company where it worked out really well for the people who worked there. So in that case, there was a financial professional who specialized with people in that company.
Yep.
So finding a random person somewhere and expecting them to actually know the ins and outs of this, even if you pay them a lot of money, they may not know. So you actually need to be in a situation where you find a financial advisor who knows what this is if you're planning to use it. Right. And not just what it is, but how it's worked and has some experience, and if it works with your company.
And you're going to have to interview the certified financial planner. They don't necessarily have to be local. You can do it over Zoom or Apple FaceTime or whatever, but find somebody. The most important thing is trust. Do you trust what they're telling you, and do you think they understand your situation? But again, don't go to Reddit to try to find a CFP.
But your coworkers might have experience in finding a financial professional who's actually worked on it.
If your plan allows for the backdoor Roth, yeah.
Right. If it doesn't, then it doesn't matter.
Right.
So
we've had a little bit of fun here today. We hope you've had a little bit of fun. Zach's going to have a heck of a time editing today's video. So hopefully we'll see you next time. If you've got any questions, specific, sales@hunterbenefits.com. I would love to be stumped. Like, subscribe, comment. If you don't like what we're doing, please, we would actually like to hear that too. Okay?